Hello guys, NZDJPY is currently buying and there's a good opportunity for us to still join those taking advantage of this buying opportunity. So all you need to do is to stick with me to the end of this video and you will get to find out how and where to do so. So I'm currently on the monthly time frame, and as you all know, we do our top-down analysis by taking it from the higher time frame down to the smaller time frames where we can get our trading opportunities. Now, on the monthly time frame, basically, we try to get our major key zones as well as determine our directional bias. And for those that have been following me, the blue rectangular bars that you're seeing on my screen are indications of our major key zones. So maybe as we go along the way in this analysis, we might have opportunities to impute other key zones, which would serve as our minor zones. Now, having gotten these areas already, the next thing would be for us to get our directional bias, and we can do this by closely looking at the market structure and what price is currently doing. Let's not forget this is a monthly time frame. So if I'm just going to run through what NZDJPY has been doing, I can take this to and show us quickly that initially it was giving us higher highs and higher lows. So in other words, the market trended upwards for a long time, and then we noticed a break of structure to the downwards direction. In other words, we had a lower high here. The market gave us what? A lower low, even broke beneath this support level and probably grabbed and ended up grabbing a lot of liquidity underneath the level, but shot upwards again to give us a lower high. And instead of continuing downwards by giving us a lower low, instead it gave us a higher low and created a new high. So we can safely say that NZDJPY is trending upwards. And where do we think it is heading to? I believe it's heading to this major resistance zone on the monthly time frame. So if I'm to bring out this skeletal structure, we can see that this is what NZDJPY has been doing. So currently it is trending upwards. So my directional bias would be what? Bullish. And we can also support this by the nature of the candles that we've been seeing for the past 1, 2, 3, 4, 5, and 6 months. So for the past 6 months, buyers have been in control of this market, and there isn't anything suggesting that this buying momentum is going to stop anytime soon. So the only thing that I would have said or what I normally say, if there would have been a perfect scenario, it would have been for us to have just a pullback into this level, and then we can continue buying. But let's see what the much lower time frames have for us. So the next thing would be for us to go to the weekly time frame, and as is customary on this time frame, I basically try to confirm my initial take from the monthly time frame, as well as try to look for the immediate structure or chart pattern that the market is presenting before. So having confirmed that we're heading upwards by way of the structure that we got from the monthly time frame, I can now start imputing the tools, some of the other tools that I use in my analysis, which include the trend line as well as the Fibonacci retracement tool. But the question is, what structure, what immediate structure or pattern do we really have that we could work with? And if I go to the line graph, the one that I can immediately see is a simple bullish structure leading to the formation of a W pattern. What do I mean? So when we have a higher low, the market gives us a higher high, comes back to give us what? A higher low. So this is what I call the simple bullish structure, because from this structure we can start seeing that we have a potential to get a new high, and that's what the market is currently doing by way of trying to push upwards. So we'll be working with this simple bullish structure, but before we do so, we'll have to add our other analytical tools. First, I can impute what's a bullish trend line, because we already established that we are still heading upwards. And having done that, as an opportunity for me to add what an internal trend line because we are dealing with what price is doing most recently. Then also if I zoom in, I can as well add my what Fibonacci retracement tool. So if I add my Fib tool from the swing high to the most, from the swing low to the most recent swing high, then I can mark out what I refer to as a Fibonacci retracement to golden zone, which is the area between the 0.5 and 0.618. And from what we can see that price had retraced into the golden zone already by way of this big bearish candle, and buyers have even already started pushing price upwards. So we have touches of our trend line, and then we have presence of buyers already in this at this key zone, minor key zone as the case may be. So everything is still pointing to the fact that our initial take is that price is heading towards this major resistance zone. So the next thing would be for us now to go down to the daily time frame to see exactly what's happening. Now on the daily time frame, we can see the structure of the market more beautifully printed, and then we can also see that our whole upward take is already playing out. Now, how do I mean? Price came into this level, it was like ranged for some days, and all of a sudden, price left the level, broke above this level, and we had a new high, came back and ranged for another few days, for 1, 2, 3, 4, 5, 6, almost a week, and then we can see that price is pushing upward. So the question I always ask is, when you get a setup like this, how do you now take advantage of it? How do we jump in? Remember, if I'm to zoom in, our ultimate goal is to or is the belief that price is going to come to this major resistance zone. So how do we hop in and get some of the money that this potentially holds? So we can now, the next thing will be for us to start going down to the some of our entry time frames and see some of the methods in which we could use to get in. So if we go down to the 4-hour time frame, we can see clearly that when price ranged here within our golden zone for a while, it broke above to give us a new high, came back to make another touch of this trend line, and played within this area for a while, and can see price pushing upwards. So because I'm analyzing the market just now, we just missed out on the most recent movement. This is a 4-hour time frame. So now we have price coming to make a retest and pushing upwards. So how would this benefit us? First, I'll impute my counter trend line. So like I said, we just missed out on this trade because you can see that, or we just missed out on this entry and not the trade itself. So like I always say, how do we now get in? Now that we've just seen that for the past 4 8 hours, price has been pushing upwards, all we simply need to do would now be to patiently wait for this upward movement to continue a while. Then we'll wait for the next retracement, and then we can now jump in. So at the next retracement, because we can see price already taking out this most recent high. So once price clearly close above this, the next retracement, or after the next retracement, then we'll have the opportunity to jump in, and our first take profit would be this level. So if I'm to impute the two, so our stop loss would be underneath this level, and our first take profit would be here. And we can see that this will give us a good risk to reward. However, I already jumped into this trade. I entered around here, and for the past 8 hours, my trade has been in profit. So this is a trading academy where I try from time to time to put out educational piece here. But if you want to learn how to trade the forex market or derivative synthetic indices market, you want to learn how to analyze the market like this, you can always reach out to us via the details on my YouTube bio. Thanks for stopping by my channel. Don't forget to like, share, and subscribe, or suggest a pair that you would want us to analyze together. Also, you can put in the comment section your take from your own analysis of this particular forex currency pair. Cheers and enjoy the rest of your day.